What's a lesson that you've learned in all those years? You mentioned you've been in some good real estate cycles and bad real estate cycles. What's a lesson that you guys have learned as you've been out doing infrastructure work or real estate in general that might be helpful to other investors?
Be conservative. Let me tell you the kind of risk that I look at from where I sit and what my job is. Number one, counterparty risk, the people that pay my bill. I need to believe that these massive home builders, the largest home builders in the United States, will be able to pay us.
Welcome, everyone, to the Directed IRA webinar. This is Mat Sorensen, and I'm joined today by our special guest, David Feingold. He is CEO of Broad Street, private equity firm, and we're going to be talking about private equity today. David, welcome to the webinar today. It's an honor to have you.
Well, thank you, Matt. It's an honor to be invited.
Well, great. Well, just for everybody's information today, this is going to be recorded. So if you miss any piece of this or if you're coming in late, just know this is recorded. It'll be posted at directedira.com later in the week. And if you are registered, of course, you will get a reminder of this once the recording goes up. So also, if you want to share it with your friends or family, it's going to be up on the website and you would share that around. Now, private equity has been a very interesting and popular asset class for a lot of IRA investors. We've had over 100 accounts invested with Broad Street on deals. And so I thought it'd be a good time to get David on, who is the CEO leading Broad Street, and help everybody else understand what private equity is and what they are doing to try to give some education to everyone out there who is investing and trying to find the right alternative assets for their investment. Now, of course, as we say it all the time, you make the decision on what you want to invest in. We're just trying to bring you great minds and experts in the space. Doesn't mean there's any endorsement here one way or the other, but David is truly an expert in this space and has been doing it for quite a while. So, David, let me have you jump on here and start letting us know about yourself and about Broad Street.
Sure. So I actually started my career in private equity 34 years ago as a practicing lawyer. I was involved with a couple of substantial law firms, was doing work for private equity firms, which are simply nothing more than companies that invest in private businesses and manage those private businesses for investors who act in a passive manner. So I had the front row opportunity of working as a lawyer, billing these private equity firms, learning the tricks of their trade, and then in essence going out on my own and taking what I had learned and trying to do it better. And 34 years later, I'm blessed with sitting atop a very large organization. We're the largest private equity infrastructure development firm in the southeastern United States. Our biggest business line is infrastructure development, where we handle the infrastructure for major home builders such as D.R. Horton and Lennar, which are the number 1 and 2 largest home builders in the United States. And that division of my business is right now responsible for delivering approximately 30,000 home sites for these major builders. So if you use simple math, 30,000 home sites at 100,000 a home site, that's a $3 billion business right there that we see at least doubling in size over the next 2 years. So we're super excited to be involved in that business, and that has led us on a journey where we also control self-storage company with Public Storage, the largest storage company in the United States. We do land banking of 30,000+ odd acres of land. We're developing the largest man-made lagoon in the history of the state of South Carolina, outside of Columbia, South Carolina, with 2,500 home sites, a lagoon, a water park, a hotel pad, and an entertainment district. We've got 9 hotels. We've got multiple car dealership franchises. We've got the largest altcoin mining operation in North America. That's a function of our real estate business and our close connections in the utility sector. So suffice it to say, we love private equity. We love the fact that our roots are in infrastructure, and it's allowed us to expand into this massive business. So hopefully my 3-minute speech kind of gave you a nice overview of what we do and who we are.
Well, that was an awesome overview. And if you couldn't tell, if you didn't know David before Broad Street, you can see they're quite a significant player. This is not them out raising money for their first fund or dealer opportunity. So, um, why don't you explain private equity? And we got Thanksgiving right around the corner here. I know you talked about basically private equity is private businesses and you're investing in a passive manner, and there's a private equity firm managing those businesses privately held. But how is it to me as an investor? Like, I'm the family member at Thanksgiving dinner that's never done this before, and maybe I want to invest in your fund or a private equity fund in general. What does that look like? What should I know as I'm looking to make an investment into private equity?
Sure. So I'll give you an example of our biggest business, which is infrastructure development. So right now we
Mm-hmm.
pay investors 14.6% annual with 4 equal quarterly payments. And the way that we handle that business is we have fixed contracts with the home builders. So for example, if we have to deliver 1,000 home sites to them over 5 years, they must buy 200 lots a year or 50 lots a quarter from us. So we know what our cash flow is going to be quarterly, and we
Mm-hmm.
take 25% of that and return it to the investor as what's called a preferred return. So when we started in this business, our first project, our return was 58.4% a year, which is extraordinarily high, but the business we're in is extraordinarily difficult. In fact, we've got
Yeah.
about 3,000 people who rely on us and work for us in order to get our projects done. So what our formula was, is if we have 58.4% gross, we take 25% of that, which is 14.6, because that 25% amount of money is the amount of cash we need to raise, because we finance our projects with 75% debt. And we just happen to use some of the largest and most well-known credit funds on Wall Street to provide us debt. So if we get 75% of our debt to do our projects from Wall Street, we need 25% cash to put down. And that's what comes from people with IRAs and high net worth individuals and family offices. And we pay them a preferred return. So as the cash flows come in, we pay out that preferred return. We manage and oversee. What I do daily is I manage and oversee these massive projects. And you can imagine having to deliver 30,000 home sites for these major home builders is quite an undertaking. And
Mm-hmm.
that's what we do. We manage the infrastructure. So that is the water, the sewer, the gas, the electric, the cable, the roads, the curbing, the drudging, the grubbing, the grading, the master plan communities, the clubhouses, the guardhouses, the landscaping, the
Yeah.
building pad. We do everything. So you as an investor, you don't have to sit and be involved in it. You can just kind of watch as we manage the projects and make it all happen. And that's why so many of your clients, Matt, have become clients of Broad Street, because we handle the management of the business. And that's in essence what private equity is, managing the business.
So there's a private market opportunity. I mean, you guys staked out in infrastructure, still kind of your biggest area. Um, why has that been, why have you been successful in that? And like, what is the competition like if I'm an investor? I'm like looking at you guys and thinking, all right, infrastructure, someone else says they're doing real estate development or things like that. I mean, what is unique about Broad Street though, in terms of the infrastructure?
So look, the little I gave you about what infrastructure is, you can tell it's not an easy business to enter into. If I wanted to open a hot dog stand
Yeah.
tomorrow, pretty simple, right? Infrastructure, very high barriers to entry. I've been doing this now 34 years, right? So through good real estate, bad real estate, there's one thing constant. Guys like us need to exist to do water, sewer, gas, electric, all that stuff to allow for building to happen. What makes us unique, what our moat is. Warren Buffett always said, you invest in a business that has a moat that makes it unique. What our moat is that number one, we stay away from land risk. We only do the developments that we know we have pre-sold, right? So a lot of real estate developers go out there and take on a lot of risk. They buy a piece of
Hmm.
land, they try to develop it, then they hope someone will buy from them. We do it the exact opposite. We go to the big home builders. We understand where they want to be. We put land under contract, but we won't close on the land until we know we already have it sold. So that takes the risk component out of it. That's number one. Number two, why are we able to do that versus other people? Because we're enormous. We're large. We're kind of like the Walmart of what we do. We are completely vertically integrated. We have our own construction company. We have our own government relations department. In fact, the former lieutenant governor of the state of South Carolina, he heads up our government relations. His name's Andre Bauer. You see him on TV all the time. We have local city and county attorneys who left government and have come to work for us. So that vertical integration allows us to take on enormous projects, coupled with our great relationships with the builders. That allows us to have these fixed contracts that give us stability with our business. And to give you a sense of how big our business is, we right now have 116 projects on our books, 59 we're actively developing and moving earth on right now, and a backlog of about 7 years worth of work. So we constantly just take money in, and as the money comes in, we activate the projects that are sitting there waiting in our pipeline. I'm not aware of anybody in the United States that has a pipeline like that. And so I've been watching this business for 34 years. When I started, Matt, I kind of looked like you. I had a full head of hair, looked all handsome and everything. And now I look like this. This is what this business did to me. But you know what?
That's
It's
real
actually,
estate.
it's been one heck of a ride. It's been worth it.
Yeah. Well, I think you guys have had a tremendous amount of success, and I think the pipeline of what you have going is very interesting too. I mean, that's one thing with the real estate development process is it takes a lot of different pieces, um, from the work you have to do with the city and all the different construction infrastructure work that has to happen. It's certainly no easy task, which is why the home builders don't want to do it. I think a lot of people are surprised and understand that, like a DR Horton and Lennar does not go do this themselves. They go engage with you to go do the land development. They're going to come in and build their homes on these lots after you guys have done all the work in the land development.
You do what you specialize in, right? So
Yeah.
just like BMW has a Michelin tire plant next to them, BMW could make tires, but they're smart enough to know, make a great car, let an expert make tires. It's kind of the same principle with us. These home
Mm-hmm.
builders that are out there, Hortons and Lennars, they're fantastic. They're number 1 and 2 in the world. They make an incredible product. But let the other people that focus on infrastructure, which is us, let us do that, make an incredible margin, and share it with all the people that participate with us.
What's a lesson that you've learned in all those years? You mentioned you've been in some good real estate cycles and bad real estate cycles. What's a lesson that you guys have learned as you've been out doing infrastructure work or real estate in general that might be helpful to other investors?
Conservative. Be conservative. You know, we often are offered financing where we can put down very minimal money and over leverage ourselves.
Mm,
And only a fool would do something like that. And when you hear about these great real estate dynasties that fail, the reason they fail is they become over leveraged and they never plan for what happens if the economy changes. Right now, the markets we're in are the strongest markets in the US. We have a 15-year deficit of starter home developments, which is what we specialize in. Nonetheless, we still act every day like every day in business is a threat to our fortress. And
mm-hmm.
Andy Grove, who found Intel, wrote a famous book about only the paranoid survive, and he's right. We never rest on our laurels. We never rest on the fact that we're the biggest, we're the Walmart. Every day we wake up and we treat it as a new challenge, and we never get too full of ourselves. And that's the key to the longevity in not just this business, but any business.
Yeah, I was listening to Howard Marks the other day. He kind of was doing this audio version of his famous letters, actually, and he was quoting someone else, but talked about the worst of loans and deals are made in the best of times. And I think that's something I've seen a lot, and I've seen a lot of our successful investors is being wary of that. And, everybody gets excited, best of times, whether it's a bank or an investor, that some seems to be they get a little overexcited and they forget to be a little conservative in their investments, and they can get over leveraged and make mistakes. Um, all right. Well, let's talk about, I know infrastructure has been big, but where are you market wise? You're in the Southeast, so you're in the Carolinas,
So
Tennessee.
we're the largest in North and South Carolina. We just expanded into Tennessee, which shares a border with North Carolina, and we're expanding as we speak into Georgia and Alabama. So those are the main states right now that have the deficit of the kind of developments that we provide. And what should be interesting to your audience is the fact that we aren't dependent on individual home sales. We work with these big builders who give a fixed contract that they'll buy, say, 1,000 lots over 5 years. So whether their sales go fast or slow, we have our fixed contract where we know what we're delivering. You know, the D.R. Hortons of the world, they're geniuses. Horton's been around for more than 50 years. Lennar's been around more than 80 years. They've seen every real estate cycle. They've been through it. They're still here now and making tons of money. So we basically also, another business lesson we learned is listen to your partners who are bigger than you and have more money than you. And if they tell you that it's a really good market, then you should go into that market with them. So I think actually what would be really instructive, I know you're the interviewer and I'm the interviewee, but I know you have a video that
Yeah, it's
Kristen
just
could
because
play.
yeah, I was wanted to tee that up for you. So
Yeah.
why don't let's roll the video here. David's going to be the narrator, and we're going to show a video here. David's going to do a little narration on some of the stuff they're up to. So take it away.
Absolutely. So this is obviously an aerial view of one of our infrastructure projects. And as you can see, we go in, we clear all of the timber. We do what's called grading the earth. That's where we contour it so that we can make sure there's proper drainage when we're getting ready to put in all of the improvements to the land. You see on the slide, it tells you all the different people. There's usually about 50 people on a work site right there. It tells you the different skill set involved. And I think even my son might be flying that drone, who knows? But anyways, you see after we do all of the development with regards to the water, sewer, the gas, and electric, you see that the home builders come in and we put the roads in and they start putting the houses up. And so this happens to be the aerial view of a project outside of Greenville, South Carolina for Meritage Homes. So you see these are starter homes in the $300,000 to $400,000 range. They're anywhere from 2,000 to 2,400 square feet, which is the sweet spot in that market. These are some videos of some of our offices. These are our corporate offices. We take a lot of pride in what we do. We actually put plaques up for every single one of our projects all over our offices. This is some of the back office corporate executive facilities. This is our conference table. I take a lot of pride in it. 55 partners. We all sit there. These are our development offices. We've got, these are actually people that work for us that are pretending like they don't see the cameras are there. So they are obviously not professional actors, but it shows what some of our offices look like, the number of people it takes to go put our projects on the wall and show what we've developed. And as you'll notice, all our walls are covered because we have that many projects, 116. This is a hotel that we've also got, a Marriott Town Place Suites. We've got 9 hotel projects littered throughout the Carolinas and part of Florida. This is another one of our hotels, an Element. That's a concept for Marriott Ormond Beach that's under construction right now. So it just shows you the amount of skill set we have in the real estate development business and all of the different kind of projects we do. That's Satellite Beach, Florida. That's Columbia, South Carolina residents in downtown by the major university. And this is one of our public storage facilities, which we take a lot of pride in. You all have probably seen it. These big orange buildings in the Carolinas, they're orange and gray. And this is one of our crypto facilities. So we take these containers, we put them on the grounds of the utilities. Since we do a lot of business with the utilities, we load them up with crypto miners, altcoin miners. There you have an aerial view. And we generate a fair amount of money, to say the least, by doing mining. It is another very exciting aspect of our business. It was a natural offshoot from all the real estate and lands that we control. And there you go. That's an overview of some of the stuff that Broad Street does. We also are building a magnificent lagoon and water park with 2,500 homes around it and an entertainment district and hotel. We also do land banking, where we buy land around our infrastructure projects, zone it, entitle it, and flip it to other developers. So we're extraordinarily diverse. We have lots and lots of people who take their IRAs and self-direct themselves and evaluate what we do. So we take a lot of pride in being a really large organization and having lots of great investor participation.
Mine
You're
there.
actually muted, Matt.
Oh,
There
there
we
we go. They got me back on. I love seeing the crypto mine there. Do they pay you in Bitcoin on that? It'd be nice if they did.
So we don't do Bitcoin. There's more profitable coins out there. So like right now, all over the press is Dogecoin. So we're an enormous Dogecoin miner. We have about
Interesting. Okay.
14,000 machines over 5 locations. And so obviously as the coin prices go up, we get a piece of the coins. And so that has been a spectacular business for us. And we have a lot of people that are
Yeah.
Bitcoin believers, and I've become one of them, seeing how it's been adopted throughout the
Well,
country.
don't we have this new government efficiency office called the Doge Department of
That's right.
Governmental Efficiency that Elon
We
Musk's going to
we
be heading?
we sure do. It's free advertising for Dogecoin, but
That's
using
funny.
the acronym for sure. Yeah, we
Yeah.
love that.
Of course, Elon's got to be involved. Um, all right. Well, let's talk about getting into some of these other areas that you guys are in. One that you didn't mention in there, because a lot of these are real estate backed. Whether you've got the infrastructure that's for the home builders. You've got the self-storage that's on real estate. You got the hotels. Again, there's real estate connection. One of the things you did mention earlier, though, was the car dealerships. How did you get into the car dealership business, and what's different about that than from some of these plays that have more of a real estate angle?
So one of our mantras in business is we look for businesses that have really high margins, right? When you sell a hamburger to somebody and you make 5 cents on a burger, you make a mistake, you lose money. But we have found that when you get involved in businesses with really large profit margins, it gives you a large margin of error. And so we were introduced to a car dealership that specialized, believe it or not, in doing police cruisers. We thought, well, this is
Okay.
unique. And it ends up being one of the largest police cruiser dealerships in the United States. And we hold 600 police cruisers on our lot. And then whenever police cruisers either exceed 100,000 miles or they're in an accident. So when we're watching TV and we see the police chases on the news, we're always rooting that the car gets damaged, no one gets hurt, so that they have to come to us and replace the car. That's bad humor. But the truth of the matter is,
Yeah.
the wear and tear on cop cruisers constantly need to be replaced. And we get calls 7 days a week to replace those. It's an extraordinarily profitable business. And so that's what we do. We analyze where are the profit margins, and those businesses that don't warrant a large margin, we're not interested in putting money in. And one of the other aspects of our business that's interesting is we happen to be the largest investors in our deals. And so I don't know how many people you speak to, Matt, that are
Hmm.
in the investor world, but we kind of believe that if you're going to be in the business, you should be the largest equity owners in the business to prove that you believe in it. So the
Yeah.
infrastructure and the car dealerships and the self-storage, my Broad Street partners and myself, we're the biggest participants in this, and it's our vote of confidence that we believe in what we're doing.
Yeah, I mean, you win when the investors win. You got your own skin in the game. It's always good to see that alignment. Um, Tell me about the different funds that you have, though. You have multiple funds. Do you have them by a vintage of years right now? Or do you segregate like self-storage from infrastructure, from the car dealership? Like, how does the fund structure work?
So look, so I oversee Broad Street Incorporated. That's kind of what I like to say is the crown jewel that manages and oversees all the assets. There is a separate Broad Street enterprise that's run by my two closest buddies in the world, Joe Baldessera and Steve Baldessera, who are the fund managers there. And they are the entity that takes in investor capital, and they're structured in what's known as a Delaware LLC with subseries. So each subseries focuses on a different investment discipline. So for example, for infrastructure, there's an infrastructure subseries. For land banking, there's a land banking subseries, et cetera. And so an investor that gets involved in a particular subseries, the documents describe exactly where that capital goes, but there's no mixing. It's not like a mutual fund where a fund manager comes in and you say, geez, I'd like to be in the stock market. And then the fund manager picks what stocks. This is totally different. The investor selects what they like, and then the capital is deployed based on the investor's selection. And I sit at the company that oversees all of these wonderful assets and wakes up every day and makes sure that we keep building and growing and doing.
If you guys have questions, throw them into the Q&A area. Tristan's going to be pulling them out of the Q&A. If there's any in the chat, we may grab them if they're good, but if you want them answered, make sure you throw them into the Q&A. I'm going to come to questions here in a second, just giving everyone a heads up. All right, what do you guys have in terms of, do you have minimum investment requirements? Is this accredited investor only? Tell me what you guys do in terms of as investors coming in.
So the Broad Street Global Fund is only available to accredited investors. Each individual investment discipline does have a minimum. I'm embarrassed to say, or proud to say, that it's something I don't worry about. It's not my department, but I believe it's somewhere around a minimum. I think is somewhere around $100,000 to start. But it's quite frankly, I'm busy enough worrying about how many lots we're selling more than that. But, that's all information. I think at the end of this, you probably put up a barcode, people can scan it, and they can get access to a data room and read almost forever. There's lots of information in there, and there's people that can speak to them and educate them. And I know Broad Street's got a website and an info button that you can push, and people will contact you and answer questions.
Let's share that slide right now just for a second so people can grab that, maybe even throw the link of that QR code into the chat, just so people are going to have that, because I know the questions are probably flying, and Tristan might have already done that. But we're going to show that here in just a second so you guys can grab some contact information for some people on David's team. All right, now, you let me know if you have questions yet, Tristan. Okay. All right. We're going to come to some questions here. So remember, use the Q&A if you have any questions. We're going to be pulling from there. And there's the QR code you can hit. Daniel's on here as well right now, I believe, and is on David's team. So that's his email there if someone wants a specific person to reach out to learn more about Broad Street.
Awesome. All right. I did drop Daniel's email in chat and the website link if you guys are looking for it. A lot of the questions did revolve around whether or not you needed to be an accredited investor. So glad we got that out of the way. Daniel did mention that the minimums really depend on the investment. So if you guys are looking for a minimum, reach out to them and they will let you know.
Okay.
First question from Keith. I feel you can mitigate risk, but not eliminate risk. I would like to hear more about the risk side of your private equity opportunities.
So,
Keith,
was it Chris or Keith?
Keith.
Well, Keith, you're a smart man. Anybody who believes there's no risk in life is a fool. There's absolutely risk. So let me tell you the kind of risk that I look at from where I sit and what my job is. Number one, the big risk I look at is counterparty risk, the people that pay my bills, right? So I need to believe that these massive home builders, the largest home builders in the United States, will be able to pay us. I'm a firm believer they will be able to pay us. However, I'm also a bald old man, and I've seen lots of big businesses fail in my lifetime too. I remember Eastern Airlines. I remember when IBM was the most important computer company. I remember when everyone walked around with their Razor mobile phone, and that stuff doesn't exist anymore. So the reality is the number one risk in my mind is we need to make sure we do business with people that can pay our bills. So we only rely on these big multi-billion-dollar home builders because we think that's the safest thing to do. But nonetheless, there's no guarantees that they stay in business. That's one. Number two, natural disasters. We are in the business of delivering product that is dependent on the weather. We have work crews outside. We're very lucky. We just went through a terrible hurricane season where the Carolinas got hit really hard, and we only lost like 10 work days of work. We're on schedule with everything. But God forbid there were a really big natural disaster, that would certainly affect us because we only get paid if we deliver product, right? And thirdly, something that's interesting to me is labor. We're really lucky. We have great people that work for us. We're vertically integrated. We own our own construction company. We've got wonderful construction crews, etc. But if for some reason there was labor unrest, that would certainly affect our ability to deliver our product. So there are certainly risks. Those are the ones I think about. I'm sure there's lots more, but the point is that anyone that tells you there's no risks in investments is not telling you the truth. But those are the big ones that I think about. And hopefully, if we've been smart, I think we have been, we've planned for all these different things. Natural disasters, we're insured. Counterparty risk, we make sure we do business with the biggest who, their financials look really good. And in terms of labor, we just treat people really, really well so that they're happy to work for us, right? So that's how we mitigate that risk.
All right. Awesome. You got another one, Tristan? I got a question. You get a viewer question ready, queued up. So, do you follow much on interest rates, and are you worried about interest rates and where they're going? Does that affect your business that much? I know a lot of investors worry about that. Homeowners worry about that. How does that affect you guys?
So in my 34 years of doing this, one of the things that I learned is if you do business with home builders that have their own mortgage departments, then when rates go crazy, they're able to subsidize rates. For example, when rates skyrocketed over the last year and doubled, D.R. Horton and Lennar have their own mortgage divisions. They were able to buy down rates, and actually they used it to their advantage. So when a 30-year fixed was 7%, you could have Googled and seen that D.R. Horton and Lennar were offering like 5.99, 4.99%. So the Wall Street Journal actually did cover story about how the major home builders were subsidizing rates and driving traffic to them. So by being smart enough or lucky enough to associate ourselves with really smart counterparties that have their own mortgage divisions, that actually drives traffic to them when rates go up, and the small home builders don't have the ability to influence the mortgage rates for their clients. So we think about mortgage rates, but we also remember have fixed contracts from the home builders, for example, 1,000 lots over 5 years. So whether they sell those lots with homes on them or not is irrelevant to us. We just have to deliver the product to them.
Excellent. All right, Tristan, what you got?
Luis is asking, does each investment have a predefined maturity date?
So it depends on the deal. For example, infrastructure, right now we have a backlog, literally 5+ years of deals. So we keep going. We'll stop taking capital in when we stop getting new deals, which quite frankly, I have 7 kids. The last thing I want to ever do is retire and be around my kids. So I hope to be around for a really long period of time doing this. So we've at least got 7 years on the book. So as long as we keep getting new deals, we'll keep going out there and you can stay with us. There are other deals that we have, what I'll say is a predefined expected exit. For example, in our public storage deal, we've projected that after 5 years, when we have them kind of fully stabilized and fully rented up, then we expect to sell them and exit or refi. So each individual deal has its own individual description, and you can obviously contact Daniel. You saw his email address or scan the barcode, and you will get the specifics of each deal and what the duration and terms are, because they're all different because we're in so many different businesses.
Let me ask a follow-up to that, David. Let's say I invest in $100,000 from my IRA into your infrastructure fund. That fund's kind of continuing, but I'm like, well, I want to start drawing on this in retirement. I know there's a stream of income coming off of it, but what if I wanted to sell that or redeem it somehow? How does that work?
Yeah, so Broad Street has a 180-day right of redemption, which means if you put in and request your money, it must be returned in 180 days or less. And knock on wood, no one has ever, I don't recall anyone waiting more than a week or two to get their money back. But the legal documents say up to 180 days, but that is a very liberal redemption policy. When I wore my lawyer hat and represented private equity firms, some of them have 2-year lockups. Some of them actually have 5-year lockups. So no, with this, it's a 180-day right of redemption. And so that in my mind, from my experience, is very liberal. By the way, a question popped up, which was a great question. And
Yeah.
again, Matt, I don't want to take your job from you, but I saw
Oh,
it pop up.
great. Yeah.
Someone asked about
You're the
1031
expert. I
exchange.
don't know what's a good question. You hit it.
So look, we have an entire 1031 exchange department housed with our own in-house lawyers. We do 1031 exchange deals very frequently. We take a look at what your deal is, how much debt, how much equity you need. We then give you a menu of deals that are going to be closing in the near future that meet the IRS guideline time limits. We give you an entire proposal, handle all the legal, don't charge you a dime of legal fees. It's just these lawyers are on our payroll, they're in-house lawyers, so we just provide it as a gratuitous service. So if you do have a 1031 and you want someone to analyze it, again, you can contact Daniel and he will send it to the back office lawyers and we can do a whole analysis for you with ease. That is a really big part of Broad Street's business, is a 1031.
Are you doing like tenant and common interests on those deals, or how
They're
does that
all
work when
TIC.
they come? They're all ticks. Okay.
They're all TIC agreements. The investor goes on to the deed. They're not DSTs. TIC agreements give you the most liberal opportunity to participate, and your name shows up as an owner to meet Section 1031's qualifications.
Awesome. That was a great question.
We do have one question from Peter. He wants to know, what is the name of the land flipping fund?
So that's just called land banking subseries. That's in the real estate world. That's what you kind of call it when you buy a piece of land, you zone and title it and sit on it. You wait for all the land around you to go up in value, then you flip your land. I have a great story about that, something I'm kind of proud of that just happened yesterday. So to show you how vibrant real estate is where we are, we bought a tract of land. The land was being developed for a D.R. Horton project. Broad Street, we held back 50 acres of that land. When we originally purchased land, we paid $10,000 an acre. We held 50 acres back. We developed the land around it. We now just got the land appraised. So those 50 acres that we paid $10,000 an acre, we're now just appraised at 50 acres at $260,000 an acre. And that's only after 2 years. So the beauty of land banking is, no, it doesn't give you present income right now. But the fact is that so many people don't want to do what we do. Infrastructure is really hard. I make it sound easy. It is really difficult to get that zoning, that entitlement, move all that earth, have it all organized and do it on time. But once you do that, then all the other developers want to come and buy that land from you, and it goes up exponentially in value. When you sell a house, yeah, maybe you can increase the price of a house 10% or so, but there's a big market out there. But when you have a piece of land and you improve it, it goes up exponentially larger than simply the housing product. So we love land banking. We think it's fantastic, and we continue to do it with our own money to this day.
Thank you, David. Scott wants to know, is depreciation available to LPs on any of the private equity offerings?
Yeah, so obviously you can't depreciate land. So anything that's just pure land play, the answer is no. But when there's a building involved, you certainly get your depreciation participation. In our crypto, there is, I believe this year it's 60% depreciation that applies to equipment purchases, and crypto machines are considered equipment. Now with the new administration coming in, I hear talk about putting it back up to 100% depreciation. End of the story is, yeah, there is depreciation. We have in-house tax lawyers, and we actually do give people opinion letters so that they can take that and give it to their accountants and get guidance as to how we're treating these items. But bottom line is, yes, there are some products out there that do have depreciation, yes.
And of course, this would matter if you're investing in, an LP or investor with individual cash. With your IRA, you're not going to really care for depreciation. It's a no tax area. But for any of
That's
the,
true.
we have a lot of people on here, even people asking the 1031 questions or depreciation, they may be considering this from investing from their personal fund standpoint.
Yeah.
All right. Any other final questions, Tristan?
We just got one that keeps popping up here. What is your customer service like? Am I assigned to a person or a team?
So that's a great question. And it's something probably I take the most pride in out of anything with regards to our business. Number one, it's really nice. People introduce me as CEO. If you ask me what my title is, it's partner. Every single person that works at Broad Street is a partner. Every person, down to the person that cleans our conference room, down to anyone working in the back office, all the way up to the executive suite, we're partners, and we treat the investors as partners. So much so that we have open houses literally monthly where people come, they're given unlimited free access with regards to speaking to anybody that works on any of the projects, exchange name, phone number, do your own diligence. We just had an event where we actually raised money for charity for veterans shelter, which we feel really strongly about, where about 600 or 700 of our investors showed up just to shake hands with project coordinators, people that they speak to in the back office. So the answer is you get someone assigned to deal with you, and it's not customer service. They're a partner that's dealing with another partner. End of story. That's the way we refer to everybody, because everybody demands and is required to give equal respect. And I have never, knock on wood, ever heard of anybody complain that they didn't feel like they got proper service. And that is of utmost importance to us, because when you put trust into a business, you're putting trust in a business. It's important. So there's only two ways that we can convince you we believe in our business. One, we're the largest investors. We've got skin in the game. And two, we treat you as if you're part of what we call, and you'll see the emails, the Broad Street family. It's that
Awesome.
simple, and that's lost by really large investment organizations. And
Awesome.
we try to make sure that that never happens with us.
All right. Well, let's share the learn more screen for
Yep.
these guys too, so people can get that QR code and the contact for Daniel to learn more about Broad Street. If you missed any portion of this is recorded. We're going to throw it up in a couple of days at directedira.com. If you were registered for it, you're going to get the recording anyways, emailed out to you. And make sure you're subscribed to our newsletter at directedira.com. You can subscribe to the newsletter there. You'll get updates on upcoming webinars. We're obviously giving out interesting tips and things happening in the retirement account space, things you should know. The latest one that went out was about the FinCEN BOI filing. For those of you that have LLCs or corporations, is a critical thing you got to do by year end. So we want to make sure you're aware of what's going on, legal requirements, update strategies and tips. And but there's a contact info for Broad Street. And David, it was a pleasure having you on today. You're a fountain of knowledge, and I appreciate all the insights you gave and letting people know a little bit about Broad Street and what you guys are up to.
I had a great time. Thank you very much.
All right. Well, we'll see you guys next time. Thank you, Daniel. Thank you, David, for being on. See you next time.